the market flies down on all of the news about Trump, China and tariffs, it's not the time to panic. It's actually the time to take a look at some of the stocks and maybe add them on this dip. So today I suggest we go and take a look at two of the most popular fintech stocks, SoFi and Upstart, and understand whether it's a great buying opportunity and for which type of investor. Take a look at this graph. Here you can see that both of these stocks were moving almost identically in the last few years. Basically, it's related to the fintech stock, to its headwinds or tailwinds, or basically what was happening with the US economy at the time. But not so long ago, something switched and these stocks went in completely different directions. SoFi is flying up while Upstart is plunging. And by the way, I'm not talking about today or Friday of the last week when we got some news about the tariffs and the Trump and China, because, well, obviously all of the market falls. But if we zoom out and take a look at the bigger picture, you would see that this is exactly what happens. SoFi is doing much better than Upstart. Does it mean that everyone should buy SoFi stock instead of Upstart? Not for sure. While there is an opportunity and definitely there is a momentum for SoFi stock, it may look overvalued right now for institutions and for majority of shareholders, and the stock price could be kept because of this. And at the same time, while Upstart is not having the best time on the market right now, the sentiment could switch because the valuation of this company is actually at almost the lowest level it has ever been. Hey there and welcome to the Market Monkeys channel. If you find this video interesting and valuable, don't forget to support our channel by pressing the like button and subscribing. So first of all, I want to start from analyst price targets for you to understand what actually has been going on with these two stocks. Let's start with Upstart. There are not many analyst revisions for Upstart in this or actually even the last months, but I actually found out that Goldman Sachs lowered its price target just recently from $78 per share to $54 per share. While it's not a great piece of news, this price target is still higher than what we see for Upstart right now. I'm filming this video on Tuesday before the market opens, and right now on pre-market the stock is in -2%, which gives us a price of $48.50 per share approximately. If we take a look at other updates, we would see that the majority of the firms of analysts have decreased their price targets, but they're still at the pretty high levels. For example, JP Morgan has for now an $88 price target, which is a lot. Needham has $82 per share, Bank of America has $87 per share. Maybe they will be slashing the price target, it's a possibility, but if we take a look right now at an average price targets from Wall Street analysts for this stock, we would see that on average analysts expect the stock of this company to be at about $77 per share, with $105 at the high and only $20 at the low. So basically what it tells us is that the stock of this company definitely volatile and no one really understands what to expect from Upstart. And it's understandable. I'll talk about this just in a moment. Let's jump quickly to SoFi and their price targets. I'll not give you updates because, well, there were not many lately, and you can see it in my previous video about SoFi. I talked about it then, it was just a week ago. But here you would see that an average price target for SoFi stock is at $22 per share right now, with high at 31 and low at $12 per share. Today Nasdaq is at -1.5%, so it's only natural that expensive stocks and fintech will be down more than Nasdaq. But getting back to our companies, here we notice very interesting situation, because while SoFi does an incredible job lately and it has a very strong momentum, analysts still expect that the stock of this company won't be going up as much as at the same time Upstart could go up. And why it's such an interesting moment is because here we can exactly see why we should break down fundamentals of the companies and not only look at the price targets from Wall Street analysts. Because while I expect analysts to increase their price targets if SoFi publishes good quarterly later this month, and by the way, in my previous video I explained why they probably will have a great quarter, Analysts would most likely update their price target, which could be an additional catalyst for SoFi stock. So even though the stock is pretty much at the fair level right now, I don't think that SoFi is undervalued at $26-27 per share. I believe it could go higher, especially if they do well on earnings and analysts start to increase their price targets. At the same time, we see that Upstart is majorly undervalued if we believe Wall Street analysts, but here I would suggest investors to be cautious, because while we see still relatively high price targets, notice that they were mostly updated in August, which was 2 months ago. So I expect that analysts will start updating their stock price for Upstart soon. And if they will decide like Goldman Sachs, we would see price target going down from 70-80 level to 50-60 level, which is still more expensive than current stock price, but it won't be helpful and it could actually send the stock flying down on the news. Not to make it boring with the numbers, I would just like to show you a couple of trends and some numbers for you to understand why SoFi is in such a better position right now as a company. So if we take a look at SoFi's revenue growth, since 2018, its revenue has increased from about $300 million to around $3 billion, and it means it grew almost tenfold, which is incredible. At the same time, Upstart revenue went from about $100 million in 2017 to about $900 million today, and basically it means that Upstart's growth in revenue was even better than SoFi's, but at the same time Upstart had a rough moment. So if you'll take a look at this graph from January 23rd up until today, you would see that SoFi grows at an incredibly stable pace. Basically, they just keep growing and the market very appreciates stability. At the same time, Upstart was growing at an incredible pace during the pandemic, but then after 2022, the stock started pulling back and started actually shrinking. Basically, the revenue started shrinking and not growing. So this is the result that you see. Upstart now came back to growth. They reported an impressive 102% of the total revenue growth in a recent quarter, which was great, but still market remembers this difficult period of time for Upstart, and of course market doesn't forget so soon that the company had a difficult time. If we take a look at another metric, return on invested capital, we would see that SoFi is doing better than Upstart, although an improvement rate of Upstart is better than SoFi's. So in this metric, this is an important metric because both of these companies, they lend money to people and they take money from other places. So this is one of the things I would be following in the future, and I would really like to see what happens with this growth of return on invested capital for Upstart. If they reach a positive level, finally they're almost at the break even, will this growth stop or will it continue trending up? Because if it will continue trending up, I am sure that market will start noticing this company. On profitability, Upstart basically works as a platform, so their margins are much better than SoFi's. Their contribution margin, for example, was 58%, EBITDA margin was 21%, but if we open profitability tab on Seeking Alpha, we would see that their gross profit margin is at 97%, which is incredible. At the same time, if we take a look at SoFi, they also have a nice margins. Don't get me wrong, they're doing great, especially for the bank. They're doing amazing, but we would see a lower rate of about 60%. Now, the biggest gap, of course, is in valuation for these two stocks. And here you would see the similar movement. They were pretty close to each other for a long period of time, but then SoFi broke out and left Upstart far behind, and Upstart is also falling. An interesting point here is that right now SoFi trades close to its all-time high valuation. So basically, according to their forward PE ratio, they were more expensive than they are right now, but not by much. And at the same time, Upstart is completely different. They are now trading at an almost all-time low for Upstart. What it tells us is basically the same conclusion, that while SoFi looks like more stable and more safe investment at this point than Upstart, at the same time, Upstart could have much higher returns because, well, this company is undervalued majorly compared to what it was for the past couple of years, even though their execution gets better and better. What to do with this information is completely up to you. Of course, there are many more metrics you should take into account, and I won't be able to include everything that we're talking about in one video because it would be, well, an hour long. But you could go on Seeking Alpha and check my article about these two stocks. I have a complete full analysis and complete full comparison. If you don't have Seeking Alpha membership, you should go and check our affiliate links for discounts. Also, if you'll wait a few weeks and come back later, you would be able to get a 7 days free trial and an additional discount because it will be getting closer to Black Friday. Don't forget that we're getting closer to the earnings season, so companies will start reporting their earnings soon, and maybe it's not the best decision to buy the stock before the earnings, although you should go and check out my previous video about SoFi because I explained why the stock of this company could actually re-rate and go even higher after the earnings. Thanks for being with me. Don't forget to support this channel by pressing the like button and subscribing. I'll see you on our channel next time. Happy investing!